Good evening, all. I'm Epstein, and here we are with your wrap-up of your stock, SPDR, ETF markets. It is Thursday, the 27th of July. It was bullish report days everywhere, and the markets broke. What? I guess it was the old factor. You finally get some real bullish news, and the markets that have been going up decide to take profit on it. That's one of the ways to look at it. GDP. They were looking for 2%. They got 2.4, and other components within it all look good. Durable goods shoots up rather dramatically. People are buying big ticket items, even ex-defense, all looking positive as can be. Unemployment claims, instead of going up as the analyst had predicted, it drops. And then to make matters worse, continuing claims drop. And now you're back down in the unemployment claims to levels seen in February. Yeah, February. So when you put this all together, what happened? Profit taking. I think it's way too soon to say, oh, the market made a top here. Could it be? Yeah, at any point. Is it? Probably not. Did anything fundamental change? Yeah, people took some money off the table. And now the question is, do those that were let out of the market, and when do they view this break as their buying opportunity? I think that's the way you have to approach it. Are some markets a little rich? They are. But if you have a strong economy, that's what things happen with. Now, the other side of the coin, I think yesterday, when Mr. Powell had his meeting, he already saw the GDP number. The Fed sees a lot of these reports ahead of time. And telling me that it comes out today and he holds his press conference yesterday and he didn't see it, no, I think he knew that. And he's alluding to the economy stronger, and it is. And now what this does is it puts back up for the moment the idea, and it puts the fear in people, oh, the Fed's going to have to raise rates even more, which makes sense off this report. But the Fed doesn't meet until September 20th. You have a lot of data between now and then. You have 2 jobs reports, 2 CPI reports. Tomorrow, we get the all-important PCE inflation report, one of their favorite reports. So we'll see what inflation is doing. If that shows it's easing, then the break today gets mitigated probably in a way. If it shows that inflation is still very strong, stronger than the market was looking for, well, that could be another negative on the market. So you have to get through that. Europe, Miss Lagarde came out, and she was, I swear to you, a clone of Mr. Powell if you watched her speech. Everybody's now data dependent, and both central banks have until the September timeframe now, so they get a lot of data to view, but all meetings are live. And that's the way you have to look at it. So just don't go into a panic. All markets eventually correct, and that's what you're getting. When we look at Microsoft, straight on down. You've had the pattern of lower highs, lower lows, and today was a continuation of the break that was set in place. You didn't need to worry about anything other than yesterday you had this signal already. Lower highs, lower lows. If you don't take out that high, you've opened the door up for the possibility of either the 100-day average, you see that, or the Bollinger Band, the closest of. Seems to me you want to run for that Bollinger Band temporarily. Are you getting oversold? Oh, yeah. So oversold conditions attract profit taking. They correct in one of 2 ways. They either embed, which means the red and the blue lines are going to go sideways under 20 for several days, locking in even more bearishness. I don't see that yet happening. Or you get a bounce to correct the oversold condition. Seems to me that that combination leads me to that conclusion. In Rivian, you lost the bullish embedded reading. I told you, if you get a reading under 79, I think the pros dump. I think today the pros came out of Rivian. What's happening is, are you noticing these Bollinger Bands are wrapping their arms this way around the market? It means volatility is about to come out of the market, typically. Does everything work that way all the time? I don't know anything that works one way or the other every single time but taxes and debt. So I expect it. I think there's a high probability. And I think that this could be your shot where the market goes back and plays around that 24.55 level for a while. Gasoline has shown no sign yet of abating. It hits the Bollinger Bands, backs away, keeps going, and until this reading gets with a 79, the first reasonable breaks, I think, will be bought again just the way they were there, until the reading is lost. And then the traders will come out. In XLF, you are probably on the opening going to lose this embedded reading. Why? You close right at the low of the day, which is a telltale on a good breakout during the day of 1.26%, that the math will try to do that. And if it stays lost, then what you do is you're looking back for the 18-day average of closes. Has the market been in a trend per se? Not really. It's been in a lower low, higher high, but that's not the trend. This is. And until that's lost, the pros are in there. Do I think they got out today? No. I think they'll make the market lose it and prove that it can stay lost. In XLI, similar to a degree, but you're an 84 reading, not an 82. There's a big difference to drop that much. If it drops, I'd look for the 18-day average if it loses the embedded reading. Got it? Prove to me you can lose it. So tomorrow's going to be a telltale day on a number of these markets. NVIDIA gave up the best gains of the day. It got to 473. It closed 465, $8 lower, but it's still very, very strong, not oversold or anything. Good support under the market at this point. In stocks, I've warned my traders. I said, don't go for the secondary market, and that's what this is. Go, if you're going to play the AI chip game, go for the big boy instead, and that's where I've been telling them this day. In the home builders, well, a little nervousness today. Why is this market acting this way? If the economy's stronger than we thought it was going to be, do you think the Fed's going to be able to peel back and not go with interest rate hikes? That's what weighed on the market. I'm going to repeat. We get a ton of economic data before you have to worry about what the Fed's going to do or not do. But in between, you're going to trade the chart pattern. And you have a higher high, lower low pattern that has an embedded reading. Lose the embedded reading, you got a problem. Again, you closed at the lows of the range today, off of it by 18 cents. You're probably going to be on the verge of losing the embedded reading tomorrow on a flat to lower opening. So be very careful. It wouldn't surprise me if it tries to do that. In the energy sector, you have an embedded reading. You have an outside day to the downside. Outside days are super important. Sometimes they're your sign that the market, when you get an uptrend that has an outside day down, a sign that the uptrend has weakened all of a sudden. And until that high is taken out, you could get a pullback in price. That's what I think it's trying to signal. Do I think it'll keep the bulls away? Well, here's the problem for the bulls. This is the first move over the 200-day average in gray right here. You've only had 4 days. That's the number I think is going to be tested tomorrow. Will you lose the embedded reading or not as you get down to is what I have to look at. In the gold market, the battleground seems to still be trying to stay over the 100-day average. Now, why did gold suddenly give everything up today? Because the dollar soared. As traders looked at the GDP and these other numbers, they went, whoa, what is going on? Look at how strong that is. How could the Fed possibly be done? And that's the headwind that's gold's enemy. Is gold trending? No. Was it trending coming into this? No. Nowhere near it. Silver market has a pattern now of lower highs, lower lows. It had lost its embedded reading back here. It came up, I said, unless it's going to take this high out, which is a low probability, price and the 18-day average should make a run at each other. They've now hit each other, and you're back to a neutral stance. In the copper market, you have an overbought market with an outside day down. Unless today's high is taken out tomorrow, Friday, or Monday, the odds favor prices want to drift lower off this formation. In BND, as you can see, again, I'm not going to say it over and over, the market was stunned by the strength of the economy, and that puts them nervous as can be that the market's got to add more interest rates, and that's got the bears in control, who will probably try to defend that by selling short in this 72.34 level with a stop over Wednesday's high. In UUP, the bulls took control, and until yesterday's low, Wednesday's low was taken out, which was 27.92. The next target seems to me to be the 200-day average at 28.31. And if you can clear that, which won't be easy, that's been a pretty stiff resistance number, then you're opening the door for the 28.59 level, which is the upper Bollinger Band. In the FXE, when you lost right here, the embedded reading, we were looking for the 18-day average, got it. Now you're in a downtrend again. And the question is, how much downside is now left in the market? You're approaching oversold territory. You got a 32 reading, steady opening will probably get you under a 30 reading and you're oversold. This is the next support level, 154 to 99.96. Where's the resistance? 18-day average. And if you take out Wednesday's high, you put the market back into a neutral stance. But going home, the bears have taken control of this market. How do you take control of things? Well, you do it in part by learning. And my outside day course, the continuation course, which it typically is, outside days are often continuation patterns, but in those times that you've been going up like right now and you get outside days down, they have a very, very important role, and they show up on chart patterns all the time. I teach you the patterns. There's 9 video chapters. I teach you how I interpret them, what I do with them, the rules associated, and targets when they're set up. I think you can knock this off on a Saturday afternoon in no time at all. We give you the charting software to work with all this, so you get everything in your pattern that you need. How do you get it? Just call my staff, 866-973-2077. You can go to iraepstein.com. You can take your cursor, move it right here. And if you get to the website with iraepstein.com, go to education. Otherwise, the easiest way, just give it a click there. I'm Ira. You have a great day. I will talk to you all tomorrow.